What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is SIGA Technologies. This finishes at $17.19 today. That is down 23.09%.
And it's gone.
So we first covered this stock over 2 months ago when this first squeezed, and it's been low-key squeezing ever since due to the monkeypox. This stock and a few other monkeypox stocks did squeeze and are still squeezing. In the past few days, it's really moons because there was some very bullish news. So let's check that out. The CEO said that the company has an approved treatment for monkeypox in Europe, and he also said that the company has a $1 billion contract with the US government. So that was really bullish. We had a couple of days of huge green candles, but today this did pull back very significantly, and that is because we're now getting some bearish news. So let's check that out. It says here, shares are trading lower after the FDA announced there is no current human data demonstrating the efficacy of TPOXX for the treatment of monkeypox. So that's not necessarily too bad, in my opinion at least, but I guess there was this misconception that there were human trials going on, which there aren't. So the market didn't like it, a lot of people taking profits, and shorts coming in here. So this actually did go into the $13 range earlier today, and has since recovered to the $17 range. So big recovery there, but still a massive sell-off today. But alright, let's go ahead, let's jump right in and analyze. So first of all, we have a bull flag developing here. We see here a couple months ago, we had an initial bull flag, so that was a bullish indicator. It was telling us that the stock was probably going to break out, and it did in fact break out, and now we're getting another bull flag developing. Here's the flagpole. No flag just yet, but that is currently forming. That is telling us that the stock may break out to the upside. In the aftermarket here, this is running up to 1845. So if this aftermarket action holds, that would be a bullish indicator for Monday. That is suggesting that Monday, the stock will run to the upside. So now let's get on to the bearish indicators. So we do have a head and shoulders developing here. Here's the first shoulder. The past 2 days, the head developed. So the second shoulder has not developed yet, but that's the next step, and that would be a bearish indicator that is telling us that the stock is probably due for a sell-off. And then we have a gap up back here at 750. So that's a bearish indicator that is telling us that the stock should come back down to 750 to fill this gap. And then here we do have an ascending channel forming. So right now the upper channel is at 1890 and the lower channel is at 15. So if this breaks 1890, that would be a bullish indicator. That would suggest that the stock will break out to the upside. And if this breaks $15, that would be a bearish indicator that is suggesting that the stock will break out to the downside. So the ascending channel is currently a neutral indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 1785 and 1625. So if this goes to the upside, next levels of resistance would be 1785 and then the all-time high of 2270, which it hit today. And there is no resistance above 2270. That would be uncharted territory. And if this goes to the downside, next levels of support would be 1625, 1575, 1465, 1440, 1425, 1395, 1365, 1345, 1320, 1285, 1260, 1240, 1220, 1195, 1165, 1140, 1110, 1080, 1035, 970, 935, 910, 880, and then 850. There is support below 850, but we're not going to discuss that right now. So right now at the current price, 1719, the channels to the upside and the downside are very wide, so expect significant price action either way this goes. However, if/when this breaks 850 to the downside, the channel starts to narrow, so expect a significant decrease in price action if/when this breaks 850. RSI is currently at 57, so no longer in overbought and overvalued territory, which this was in just yesterday, but still a little bit above average there. So according to the RSI, the current price of 1719 should be a little bit lower, and this did 50 million in volume today, way above the average of 3 million, so the sell-off today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So yeah, the stock has been squeezing the past couple of months, riding the monkeypox wave, went up over 200%, and unfortunately today, the FDA had to drop a bomb. So the squeeze had to come to an end at some point. The fact that it was going for 2 months is pretty crazy in itself, so some healthy pullback was long overdue, and unfortunately, the stock is starting to look pretty bearish, in the short term at least. So therefore, if you want to go long, not financial advice, I would not do that, and I would not recommend that. It's actually not such a bad entry. A slightly below average entry here, according to the RSI, but it appears like there's a lot more downside to go. So you wouldn't necessarily be buying into the all-time high, but it's still a bit too much in my opinion. So again, there is the gap at 750, which should fill. It may take a while, but eventually it should. So from the current price of 17.19 down to 750, that would be over a 55% downside potential. So pretty big downside potential here. And this really shouldn't go too much further to the upside. The squeeze still is on, but this is starting to show weakness. And again, can't keep up forever. Has to come crashing down at some point. So I would say going along at the current price, 17.19 would be a high risk, medium reward play. I say high risk because, again, over a 55% downside potential here, and I say medium reward play because the squeeze technically isn't over just yet, so you can make some money to the upside here, but again, I don't think there's too much more upside, and it's probably going to pull back here pretty significantly in the short term. So I don't like the current entry of 17.19, but I can support going along at 750, where the gap is. I think that'd be an excellent entry, and if it pulls back, then you can just average down at these supports on the chart. And at 750, that should be some huge upside potential in the longer term. Now, if you want to go short now, financial advice, looks like a pretty good play. You already missed a lot of downside today, but the current price of 17.19 is still an above average entry on the short side. And again, this should pull back down to 750 in the longer term to fill the gap there. And again, that would be over a 55% downside potential. So I would say going short here would be a medium risk, high reward play. I say medium risk because again, this is still short squeezing. It still has momentum behind this right now. So anything can happen, but realistically, I don't think this is going to go too much more to the upside. It's been squeezing like crazy the past 2 months. Long overdue for some very significant pullback. And I say high reward play because again, this has a 55% downside potential here. So as long as you're able to withstand some upside pressure, you should be able to make some pretty good money here on the downside. So I can support going short at the current price, 17.19 and higher. And again, I would cover at 750 where the gap is. So pretty straightforward, guys. The price action on the stock has been absolutely insane the past 2 months. This has been short squeezing ever since monkeypox has become a concern. We had bullish news the past few days, and the stock really took off. But today, the FDA had some bearish news, and this is pulling back pretty significantly. That's pretty disappointing, but let's be honest, this was way overdue for some healthy pullback here. And the stock may not be done squeezing just yet, but this is starting to look pretty bearish in the short term. So if you want to go long, I would not do that. I would not recommend that. This literally hit the all-time high today. This is towards the end of a short squeeze right now, so you're probably going to get burned going long here. So I don't like the current entry of 17.19. If you're patient here, this should eventually pull back down to 750 where the gap is, and I think that'd be an excellent entry. A lot of upside potential there. It really shouldn't go too much further to the downside, so you can't go too wrong buying in at 750. So I can't support going long at 750, and if it pulls back, then you can just average down at the supports on the chart. And if you want to go short, you missed a lot of downside already today, but at the current price 17.19, this is still an above average entry and still a lot of money here to be made on the downside. So I can support going short at the current price 17.19, and I would cover at 750 where the gap is. So as long as you're able to withstand some upside pressure here, you should be able to make over 55% to the downside here. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is SIGA, SIGA Technologies. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys on Monday. Have a great weekend, everybody. Peace out.